Bitcoin, past, present, and future. Bitcoin, the world's first cryptocurrency, has revolutionized the way we think about money, value, and the financial system. Its journey from a niche concept to a global financial asset has been extraordinary, and its impact continues to evolve. This digital currency was introduced in 2008 by an anonymous individual or group using the pseudonym Satoshi Nakamoto, who published the Bitcoin white paper titled Bitcoin, a peer-to-peer electronic cash system. The goal was to create a decentralized digital currency that allowed people to exchange value over the internet without the need for intermediaries like banks. By 2009, Nakamoto released the Bitcoin software, and the first block of the Bitcoin blockchain, known as the Genesis block, was mined, marking the beginning of what would become a new era in finance. In its early years, Bitcoin was primarily a project for cryptographers and technologists. It had little to no value, with its first real-world transaction famously involving the purchase of 2 pizzas for 10,000 BTC in 2010. At that time, Bitcoin was more of an experimental idea, and it was difficult to predict that it would eventually be worth thousands of dollars per coin. However, over time, Bitcoin gained attention as it demonstrated the potential to be a secure, decentralized alternative to traditional financial systems. As Bitcoin's blockchain proved to be reliable and resistant to censorship, its value started to increase slowly. It was in 2013 that Bitcoin's price first crossed the $1,000 mark, gaining more media attention and piquing the interest of investors, speculators, and financial institutions. The volatility of Bitcoin's price has been a defining characteristic throughout its history. During the early years, its price fluctuated wildly, often rising and falling by significant percentages within days or even hours. This extreme volatility was driven by a combination of factors: limited adoption, speculative trading, and the uncertainty surrounding the cryptocurrency's future. The price reached an all-time high in late 2017, when Bitcoin hit nearly $20,000 per coin. However, this meteoric rise was followed by a sharp crash, with Bitcoin's price plummeting to around $3,000 by early 2019. The sharp rise and fall of Bitcoin's price have led to intense debate about whether it is a speculative bubble or a legitimate store of value. Despite these fluctuations, Bitcoin has managed to establish itself as a store of value for many, particularly during times of economic instability or hyperinflation. Bitcoin's early years were marked by a lack of regulation and acceptance from mainstream institutions. In the beginning, governments and financial regulators were largely indifferent to Bitcoin. But as the cryptocurrency began to gain in value and popularity, it attracted the attention of regulators. Over the years, various countries have taken different approaches to Bitcoin, ranging from outright bans to supportive regulatory frameworks. In places like Japan, Bitcoin has been recognized as legal tender, while in other countries like China, cryptocurrency trading and mining have been heavily restricted. Despite regulatory challenges, Bitcoin has continued to grow and attract institutional interest. In recent years, major companies like Tesla, MicroStrategy, and Square have purchased Bitcoin as part of their corporate treasuries, while financial institutions like PayPal and Fidelity have started offering Bitcoin services to their customers. The rise of Bitcoin has also spurred the development of an entire ecosystem of cryptocurrencies, blockchain projects, and decentralized finance (DeFi) applications. Bitcoin remains the largest and most well-known cryptocurrency, but it is no longer the only one. Thousands of other cryptocurrencies, such as Ethereum, Ripple, and Litecoin, have emerged, each with its own unique features and use cases. Ethereum, for example, introduced smart contracts, enabling developers to build decentralized applications, dApps, on its blockchain, while Ripple, XRP, focused on creating faster, cheaper cross-border payment solutions. The growth of this broader ecosystem has expanded the possibilities for cryptocurrencies and blockchain technology beyond just digital currency, with applications in supply chain management, healthcare, finance, and beyond. Despite Bitcoin's success and increasing adoption, challenges remain. Scalability, energy consumption, and transaction fees are among the most pressing concerns facing the Bitcoin network. The Bitcoin blockchain, in its current form, can only handle a limited number of transactions per second, leading to congestion and delays during periods of high demand. This scalability issue has led to the development of solutions such as the Lightning Network, which aims to enable faster, cheaper transactions by creating a layer of off-chain payment channels. However, the widespread adoption of such solutions is still in its early stages. The energy consumption of Bitcoin mining has also been a topic of debate. Bitcoin mining, the process by which new Bitcoins are created and transactions are verified, requires significant computational power and energy. This has led to concerns about its environmental impact, particularly in regions where the electricity is generated from fossil fuels. However, many in the cryptocurrency community argue that Bitcoin's energy consumption is a feature, not a flaw, as it provides security and decentralization. Furthermore, there is growing interest in the use of renewable energy for Bitcoin mining, and some miners have already begun transitioning to solar, wind, and hydroelectric power sources. As Bitcoin continues to mature, its future remains uncertain, but full of potential. One of the most exciting developments in the Bitcoin ecosystem is the increasing institutional adoption of cryptocurrency. Major financial institutions, including investment banks, hedge funds, and insurance companies, are beginning to take Bitcoin seriously as an asset class. In 2020, for example, Grayscale, a digital asset management firm, reported that institutional investment in Bitcoin had surged, with corporations like MicroStrategy and Square purchasing significant amounts of Bitcoin for their balance sheets. This shift towards institutional adoption is a sign that Bitcoin is transitioning from a fringe asset to a mainstream financial instrument. Another key aspect of Bitcoin's future is its potential role as a hedge against inflation. In recent years, concerns about inflation have increased, particularly in the wake of massive government stimulus programs in response to the COVID-19 pandemic. With central banks around the world printing more money, some investors view Bitcoin as a store of value that is not subject to the same inflationary pressures as fiat currencies. This view has been bolstered by Bitcoin's fixed supply, as there will only ever be 21 million Bitcoins in existence. Unlike fiat currencies, which can be printed at will by central banks, Bitcoin's supply is capped, which makes it an attractive option for those looking to preserve their wealth in an environment of rising inflation. Moreover, the development of Layer 2 solutions like the Lightning Network and advancements in privacy technologies could further enhance Bitcoin's utility. The Lightning Network,